Hello, this is Daryl Martin from ApexInvesting.com doing another Be the Sniper or Be the Target. And it's your choice to make, so make it today. As usual, we have disclosures, and there's risk involved in investing. Know what you do before you're doing it. And we got a few announcements. One is the Kids Heart Challenge. We do this every year with my son Judah, and he works to raise money for the American Heart Association for kids with heart disease. And they help out with not only the kids, but also help out with the PE classes. And I always open this up to Apex. And last year he was the top fundraiser in his school, and he's got a goal of $1,000 this year. And so if y'all would consider donating, it would be greatly appreciated. And it's for a great cause, to help out kids. And if you just go to over here to his website, I'll open it up at judahmartin.com. It'll show you all the information about it, and you can donate on there. And he's already donated, and he donated $100 from his own trading money. We got $20 from Facebook, and I put in $100 on there. And so I just wanted to open that up to everybody. Just a great opportunity to help out, kids that are not very fortunate. So hopefully y'all will find it in your heart to help him out and help him raise his goal. Next, let's see, thing we got the $1 million giveaway going on. We're doing another $1 million giveaway where we're giving away 10 100,014 contract paid performance counts. You get one entry for every evaluation and for every reset you buy between February 9th and March 2nd. So, and we'll make the announcement on March 3rd on Apex Trader Funding, or on Facebook.com/Apex Trader Funding, and on YouTube.com/Apex Trader Funding. So, exciting stuff there. And we also got the discount code, 50% off, good through the end of March. I don't know why I have last day on here. It's not the last day. But for the $1 million giveaway, we got till the 2nd. But you can get 50% off with Apex 50 on your valuation accounts on new and recurring billing. So, and that's good through March 31st. Again, the $1 million performance count giveaway is actually good through March 2nd. So let's do a chart review. So it was an interesting day to trade. And let's see, we got a question. If I get funded with $1 million, I will keep 90% of the profits, correct? We keep the first 10,000 and then 90% after that. And liquidity is provided through the brokerage firm, the FCM. Are you working with a bank? No. We do work with brokerage firms. Apex Trader Funding does. So they are matched with orders in the market. So we don't fill the orders. We don't have anything to do with them. All right, so that answered that. Let's go ahead and look at simplicity. So, was it challenging this morning? Yes. Okay, so let's look at a couple of things. I wanted to show you a few things I looked at. This is when I got in on the market, and right as the market, before the market opened, about an hour before the market opened, the PPI report came out, and bam, it flew down a pretty good amount, about 50 points, and pulled way back, and then just went into a chop mode. Couldn't really go much of anywhere. And that was a big clue to me that with that bad report that came out, showing inflation for companies for direct to consumers, inflation was double what they expected, and the market wasn't dropping hard on. I mean, it had one big drop, but it didn't have enough oomph in it to keep going down, and at least not at a very rapid pace. The market just had one reaction and then just totally went sideways after that. So what do you do in sideways markets on simplicity? So what we're going to do is we're going to go ahead and fast forward here to 9:30. And then get out of the dark zone. All right, somebody just said it. Benjamin just said it. You go for targets. And so to help you with targets, something that I don't often show on the screen, but I thought would be important is you can add what's called I zones, Apex Diagnostic I zones, to the chart. So, and all you do is right click on the chart and click indicators. And then you choose the institutional zones indicator. Scroll down, choose that, double click it, and then click OK or add. Okay, so the reason it looks different is because I have all the levels printing from the 30 tick chart. I also have I zones on it. So I use from Thrive, we have a indicator that if you have purchased Thrive, you are able to use the Apex order prints trade copier, and it copies over the levels. I also have dynamic magnets and flux levels. So we just have the basic simplicity chart on HotCom. So if you want to be able to see all this information, you want to be able to watch it on your own computer. Okay? So also I went over this with a mentor student today. We walked through today. And the market's opening up. And then right there gives you a potential long. Right back here. Knowing that we had all this chop right here, and the market right there with both lines angling up and both angles being, both are green and both are angling up. So the basic rules are enter, 2 ticks above the high of the bar. But you always got to look left. Okay? So looking left, do you see where it's coming right into a level? Like into a mini magnet right there, into an I zone, right into the chop. Does everybody see that? So is that a trade you'd probably want to take in a range-bound market, going right into the top of a range to the left? And it can get real easy just to get caught in the, okay, I buy when it breaks a high, I sell when it breaks a low, but you got to look left. And the I zones can help you look left on the chart. Because they'll look back further than 1 hour. They'll look back, days. Okay, so they'll sort of help you read the market a little bit. And you don't get like overly concerned with every I zone, but when you look left and you see something there, I zone means institutional zone. And it's where there was major support or resistance. So going right into the top of that range would be a bad idea. What happened right after that? Well, it shot straight down. And then it finally comes back up, back into that same top of that range, and shoots down. Okay? Yeah, the I zones are the faded red and green lines on the chart. And they're darker if there's more zones stacked on top of each other. So if you're going right here and you're looking at this, and now you got a short setup, if it breaks the low, do you have far to go? Or if you were, would you want to take profit pretty soon? Yeah, the most you're probably hoping to go is down to this dev level. And you also have this flux level right here. Do y'all see that? And notice we're at the low end of the chop range. You got a top up here, and you sort of have a bottom down here where the dynamic level is. So you could look at taking that for, 5 points or 10 points, but you're already so low, it's probably not the best idea. You're better off taking one when you get up, you're up at the top. And you can see how it made a pretty big pullback of about 25, almost 30 points. And then it started to drop down, and then it went right back up. And then it starts to drop down, comes back down to that flux, now comes down to the dev. So if you had have taken the trade, which I wouldn't have recommended because you didn't have very far to go, But if you did take the trade, you know, you would have rode through like a 30-point risk to make 5 to 10 points. Okay? At the end of the webinar, I'll go over how to set up your simplicity chart if you haven't set one up before. Okay, so it comes down here, and then it starts rocketing back up. And now we got a entry right here. Would we look to be taking this thing like to the moon, or are we going to target an area? There was no early entry because it didn't break the high. So therefore you didn't have an LRE. Yeah, so we'd look to use a target. So what would that target be? It'd be right up here in this range. So if you did take this trade, when it breaks up, right there is about where you'd be wanting to take profit. And that's still actually a decent trade. I mean, you went in and you got about 20 points, 25 points on the trade. Does everybody see that? We started off with chop from the PPI report. And so we want to be very target specific until it breaks out of this range. So we watch it, and then it goes up a little bit more, and then starts coming back down. All right, so we got another short. So if we were to take this short, what would we do? We go down and basically target maybe this flux level at best. Okay, don't try to just trail it and trail it and trail it. Okay, and then we're out of the trade. Well, if I zoom in, then you won't be able to see what I'm looking at on the left. Let me do that. That'll make it a little bit more apparent. Now, another big thing is when you're range bound like this, it's very choppy, right? Does that make sense to everybody? It's sort of obvious. Do you think it's the best idea to do LREs when you're in a range? Yeah, you got a lot of wicks. Like, just not a great idea to do LREs. So I'm not looking for LREs when we're in all this choppy range mess. I'm not going to touch them until we've broken out of it. Like, to the upside or the downside. Okay, so we got out of that flux there. It did make it down again to the bottom of the range. And then it gives us a long right here if we break the high. Haven't broken it yet. Now we have a long. So if we take that, what are we going to do? We're going to target right up here. And it comes down, goes around, and finally moves back up. And now we hit our target. Does everybody follow me so far? Because, I mean, this is a really hard chart to trade if you're not really paying attention to that range that was, like, right there in your face at 8:30. That the market was going to be range-bound. But by seeing that news drop and then it just going sidewards, you can sort of expect it. And then just looking at the I zones, you can see where we got a big buildup up here and down here of where you want to be taking profits. Now, eventually it does break out. And who was in the room this morning on the last long? Let's see here. We had our entry off of this bar. So the stop would have been right below, if it closed below the low of this solid line. I would not take another long as soon as it breaks unless it gave me a long. But what are we up near? What are we getting close to? Yeah, we're getting close to the 1 dev. And what does that mean? 1 dev means that the market is stretched to the point of how far it's expected to move. 1 deviation is basically 70% of expected movement in a given day. There's only a 30% chance it's going to go much further than that. Okay? And so we expect it to go up and hit that dev, maybe break through it a little bit, and then, like a rubber band, snap back. Okay? So what do you think I'm looking for when I'm up here near a dev? Am I looking for a long? I'm looking for, as far as simplicity goes, I'm looking for a short. Okay? Now, one thing it has done, which I don't have to trail on, is it's broken out of the top of that range. Right? So we had this range over here. It's broken out. So I actually could look at what kind of trades. Exactly, LREs. So lower risk entries. So if I follow along, actually if I look right here, this trade was within 2 points of the previous solid line. So right there. And it pulled back to it. So on that, I could go for a 10-point move. I mean, this bar itself is more than 10 points. So I'm not going for some big move into a deviation. So I could take an LRE right there and then grab my 10 points. And then it moves over, pulls back down. I could take it again, and I got 10 points between where we're at there. Takes its time and makes its 10 points. Now, what am I looking for over here? LRE means lower risk entry. It means if the market gets to within 2 points of the solid line, you can go long and take profit. And this is important, 10 points from the solid line, with the stop 5 points below it. So I'm expecting there to be a short, setup. So I'm waiting on one. That went 1 tick below, but not 2. Going over here, still looking for it. And would really like it to come off the 1 dev. Doesn't have to touch it, just within 2 points of it. So if we hit the 1 dev yet, no. So, and in the room, I actually called this trade before I went on a mentor session, and I said, hey, if it gets up to the 1 dev, then I'll be looking for a short to take down to the 0.7. So it moves around, goes down up a little bit. Now, let's just say if you did take this, let's go back for a second here. Say if you went on here and you did hop in right there, where would your target be? Where is a simple target? Because it hasn't hit the 1 dev yet, so you're not wanting to trail. Now, I wouldn't go for the flux. I'd go right here. Look at where it was range bound, right there. That's all I'd go for. We haven't hit the dev yet. So literally all the way up here at like 14,518. Where it was range bound. So it goes, comes down, take profit. And exactly, that's also the top of the prior range. So what was resistance now has become support. Okay? Now it moves around. It goes back up and it hits the 1 dev. So now what are we looking for? now we are in short mode. We're looking for a short. So we're waiting on the market to potentially give us 2 ticks. There we go. Okay, now if it breaks the low of this, then we have a couple choices. One of them is we can go all the way for that 0.7 dev. The other one is we can go for this target range right here. It breaks it. And all of a sudden, it goes sideways on you. All dev levels are important. What do you think is happening up here? It went up here, it hit the 1 dev, and then it's just going sideways. It is choppy, but why is it choppy? Because we normally expect it to be choppy at a dev. There's a fight, and what there actually is there are institutional traders that are in the market, and they are building up their position. There you go, Ed. They're doing accumulation. So they're building up a position to bring the market short. Because if you want to sell a lot of contracts, you can't do it all at once. If you want to sell like 1,000, you got to put a few on, put a few on, put a few on, put a few on. The I zones again are support resistance levels. They're called institutional zones. So what's happening on here is you got the market, the large market movers are building up a short position. And they're probably going to build it up, fly it up to knock out all the last longs before they bring it down. Because they want to be able to sell at a higher price. Does that make sense? So if you want to sell a lot, you're going to only layer in, and then you rip it up, and then you drive it straight down. So we go over here, and we watch it do this. They went in, they ripped it up. Still waiting on that short. And remember, they could always rip it up again. All right, so right here, we get a short. If it breaks below the low of this level. All right, so it breaks it. And at this point, and this is something I think is really important, I do this and I talk about this in the room, but it's a good example to show you. One thing I'll do when it closes really close to the solid line like this is I'll put my stop at the high of the bar. Especially if I have a very low additional amount of risk. Okay? Because, I mean, there's my entry price. There's my stop. I'm basically at break even at this point. I mean, it's a little bit lower, but it's not far from where we got in. So it oscillates around, drops down. And now this is where you have your moment of truth as a trader. Am I going to take my profit, or am I going to hold to the 0.7 dev? Okay? So some of you are going to take profit, some of you are going to hold it. And winners are never satisfying, because you should have held it, or you should have taken profit. You never know. So, let's see what it does. Got right down to the 0.7 dev. Now you're mad, right? So you still could have had a great trade. So now, do y'all remember what that bottom of that range was to the left? We're right at it. It was 0.7, right? It was at the 0.7 dev, like in the morning. I don't use an ATM on this setup. I set my orders right after I get in. So we're back down to where the market hit its low and shopped around like crazy. So that's why I had that 0.7 as my target. Not only was it a dev, but it was also the bottom of the range. If I scroll back here, you can see where 0.7 is what it bounced off of and what it bounced off of again. All right, and then it comes down, hits 0.7. So what is there a good chance that it's going to do again? Because remember, it's a range-bound day. I mean, that's still a 60-point move, which is great, but what is it probably going to do next? It's probably going to chop at the dev and then bounce. Yeah. So now we get a long setup, and we got a pretty clear area. You don't see a lot of zones or anything in your way. What could you go for? The one dev. Y'all see how that clearly, like, you had a nice clear trend, wiped out a lot of price action. It could easily go back up to the one dev. Would it have been too late to enter at 12.14? No, you could have entered there too. But it'd have been tricky because you're at the bottom of this range and now you got all this risk. Whereas if you entered here, you have profit. So yeah, you got it curving around, coming up. Don't got an entry yet. Waiting on. Okay, so now, nope. Right there. Both are angling up. Comes down and knocks you out, but it's a low risk trade. Our stop's right there. We get out, or we set our stop right at the low. So we're out of the trade. We're still. What are we still doing? What are we still waiting on? Because what's happening again? It happened at the top. What's happening now? Yeah, now they're accumulating their position to drive it back up. They're getting their orders in. So, depending on how confident you are, you could always set your stop below the low that it hit earlier. Right, below this dynamic magnet. But, let's just say you got out at the lower risk, which is the wiser move. Like I said, wiser move. Comes down. I'm still waiting on that long. It's broken out of here. Now we got a good point. Because remember what I said they like to do? They like to accumulate a position and then knock everybody out before they drive it to where they want to go. Just like they did at the high over here. They accumulated a position, they knocked it up, and then drove it down. Over here, they accumulated a position, they knocked it down, and then now they're driving it back up. So it's sometimes good to wait for that knockout. Like if I would have got in during this chop, you know, where would I be having my stop at? Well, we talked about that. Well, below this dynamic magnet here. It goes down, hits the next dynamic magnet, and then starts to reverse. So now both are angling up above the 0.7 dev. And right... Let's see, waiting for our entry. Now you're in. And now it's going up. We've got an LRE right there we can take, where it came down within 2 points of the solid line. Okay. Take it off at 10 points profit. Got another one. Profit. And here's one where we closed. Remember I said like just right there below the line. I set my stop below it if I wanted to stay in because I don't have much to risk, like maybe a point or two. Okay, now I'm out of the trade. All right. I still think it's going to go up to the 1 dev. It just is oscillating at this point. So waiting on another long entry. There we go. Got it. And then we're at the 1 dev. They could, and if they are, they could. So the question was, could they be accumulating again to drive down? Yeah, they could. And what do they usually do if they accumulate? They usually go up and pop everybody. And where would they pop them to? That 1 dev. All right. Does that help? I mean, it was a really challenging day, and I wanted to show you something that's not just, I don't, it's always nice to show the easy trades. But to be able to show something, when it's really challenging, I think that's even more important. Because, I mean, it's not just having the easy days, it's surviving the hard days. That's what makes the difference for you as a trader. So the question came up, how do you set up your simplicity chart to look like this? Okay, so 1, you have to have a gold membership. You have to have an IQ feed subscription. You got to set up VXN, like all the steps that I go through in the video on simplicity. You got to make sure you're connected to IQ feed. All right, so those are the basics. But as far as like the indicators, so I got my 60-40 chart set up for the flux levels. I got my dynamic magnet chart set up for the dynamic magnet levels. And then what I do for the other levels is I go over here to the 30 tick chart. And again, you have to Thrive to set this up. It's just 30 tick plain all is the name of the template. But what I do is I add an order prints. I go in there and I put NQ30 in the copier identifier. Okay. And then on here, I add the order prints copier indicator and I put in NQ30. And that copies the indicators over. And then I added on the institutional zones to get the red and green support resistance levels. How did I decide shop at -1 or is +1 dev? At +1 dev was accumulation to short versus consolidation prior to a long continuation. I didn't decide. I just sort of made a expectation that reasonably it's going to go up to that and pull back. Now we pulled back. Now it's any person's game. It could keep going up because it went back down to the 0.7. It could keep going. But it hasn't touched that 1 dev in a while, and it come back up to it, it's probably going to pull back down. Is there a reason I place more weight on support resistance devs as targets over walls? Yeah, because if it's chopping through walls, I'm not going to give them as much value. So I'm going to give them value when it's, going up to them and bouncing off of them and coming back down to a wall. But if it's chopping just up around a wall, it's not going to have as much value to me. Wouldn't you have been stopped out at 448-ish? Or sorry, 148-ish? I guess that's what you mean. Let's see here. Not sure what time you're trying to quote. 14,448 level. Way down here. This is where you got in. So not quite sure where you're going. All you got to do is set up the dynamic magnet chart to show the dynamic magnet levels. They're in the setup videos on how to set up the charts. Yeah, I'm sorry. I'm just not sure what you're saying because I'm at 14,448 like you're saying. I mean, this wouldn't have got stopped out. Even here, I would have waited till it went the other side, which it didn't. And then it continued on up. I was reviewing the 6-3 calculator and wondered how you might adjust if you did micros on some accounts. Just use 2 for profit target instead of 20. I wouldn't change my profit targets on micros. I may change how many micros I'm doing, but I wouldn't change my profit target. Would I have taken the high stop loss early entry at 13.20? Right there? Well, I was already in the trade. So I wouldn't have needed to take it. But that's a very large bar. I'd be very hesitant to get in right there. No, there's not one in Excel to download. I mean, my goal is to 1 dev, so my profit to risk ratio is good. If I was going to enter here, I mean, I'm expecting a move up to the dev, but I still would have got knocked out right here. But, I mean, that's, still 16 points. Or 10 points, I guess. 10, 12 points. If you're going to a point where you're starting to make money, how would you scale up accounts? I would wait until I'm at double my profit target in a funded account. So if the profit target was like 3,000, I'd wait till I was at 6,000 in a funded account before I scaled up. Exactly. I didn't get out here because it didn't close below the solid line. Wider zones just mean bigger bars. It doesn't mean it's stronger. Now, multiple, when it's darker, it means that you had multiple bars help create that zone. Let's see. Do you have to have all your indicator apex systems to be able to have the copier? Yeah, to have the order prints copier, you have to be an elite member and you have to have Thrive. So you need both of those. Yeah, VXN is the data feed for NASDAQ. If you load the Simplicity NQ chart, it'll automatically put VXN in as the instrument. So VXN is the symbol. The data feed is IQ feed. Because you have to have the IQ feed to be able to do that. I don't really trade Simplicity on ES because it moves so slow. So it's decent on YM, but I like it on NQ. If you're on the trial, then you cannot do Simplicity. You can look at it in the charts, but you have to be an elite member to be able to get Simplicity. So, but, I mean, my biggest goal today was to help y'all see when to use targets versus when to trail. So for Simplicity, is it always a good idea to sit on your hands during accumulation when it's moving sideways, wait for the breakout, and then take the next Simplicity trade? If it's at a major level, yes. Yeah, also another big point was when to not look for LREs. That's in range-bound markets. So if y'all just took away, like, when it's range-bound like that, especially after a news announcement, to not look for LREs, to look for targets, and then wait for a breakout before you look for LREs, then y'all got a lot from this webinar. You got, hopefully those are the main points you took away. So one thing y'all may have noticed is that, I don't know if you know, but liquidity is really low. It's even low in ES right now. It's low in the bond market. The market's been very on edge due to the potential war breaking out and all that stuff. Hopefully the liquidity will get thicker, but when liquidity is really low, you're not going to get a lot of sniper trades. And that's why it's good to have both charts set up so that way you can trade in any market condition. When we'll be doing a live class, we haven't decided yet. We got to have a lot of content together for that. Basically, one dev is about a 70% encompassing of expected price movement. Yeah, the indices have low volume because bonds have low volume because the market's on edge on what's going to happen next. Like, it's really on edge. Where can you find information about the trade copier? Just log in and click on trade copier. Or go to apexinvesting.com and click on trade copier. It'll take you to the page and tell you exactly about it. And you can sign up for it. It's heavily discounted. My thoughts on USSR? My thoughts are it's bogus. That nothing's going to happen, but we'll see. What do I use to read volume? I use order prints and I use tick strike. apexinvesting.com/tick strike. Yeah, it's all hype to move the markets, exactly. So they're trying to keep them escalated while, you know, they will also want to unleash all this increase in interest rates, which they sort of got to do because of inflation. But they're trying to figure out how to make the markets go up. So yeah, it's just all manipulation. But as a trader, I'm just here to watch the charts and do what the charts say, and not let my opinions, you know, impact that. Yeah, it was really choppy this evening. I'm just down a little bit. But considering like 60 grand earlier in the day, I'm not really worried about it. I was just trading one contract at night, playing around. Market prep in the morning, I look at zerohedge.com, I look at forexfactory.com, and I look at financialjuice.com to see any overnight headlines, what's coming up, what's expected. And then I usually watch the charts for about 30 minutes before I make a trade. What is my forecast for tomorrow's session? I have no forecast. that is very dangerous. It costs you a lot of money. Loading a 30 tick won't slow things down. It'll just make the bars bigger. Doesn't change the speed. I have simplicity. I have the 30 tick chart. I have the 10 tick sniper chart, and I have the 50 tick chart always up. Do I favor pre-market? I mean, sometimes it works out great. You know, sometimes there's nothing. I mean, this morning I just sat there, didn't do anything. Just sort of when I get up and get around to it. Forex Factor just lists all the upcoming news announcements and explains them. I have I have I have 12 monitors, but for NQ I have 4 charts up, and I have one chart dedicated to each one. I don't, Reggie. Let's see here. What do you think? Let's see. All on different monitors. Okay. Well, I think I answered all y'all's questions. Um, Again, I hope y'all walked away from some big lessons. And again, if you can donate to judahmartin.com, if you hop on there, it'll take you to Kids Heart Challenge and help him raise some money. That would be awesome. And I'm going to Vegas next week for the Traders Expo. So if anybody's in Vegas or around Vegas, I'll be out there. And we'll have a booth. And then we'll probably do a webinar when we get back. All right, y'all have a great evening, and I'll see you tomorrow.